This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China has issued a third round of petroleum product export quotas, covering 5 million tons of refined fuel and 2.5 million tons of low-sulfur fuel oil, LSFO, allowing refiners to cash out solid export margins and help ease tight global fuel supply. The quotas, issued earlier than expected, will bring this year's total refined fuel export quotas to 22.5 million tons, 39% less than the first three allotments last year, and total LSFO to 12.25 million tons, up 11%. 7 companies received new refined fuel export quotas, sources familiar with the matter said. They were China National Petroleum Corp., China Petroleum and Chemical Corp., China National Offshore Oil Corp., Sinochem Holdings, China National Aviation Fuel, Zhejiang Petroleum and Chemical County and China North Industries Group Corp.
The European Parliament on Thursday backed landmark rules on aviation fuel that set binding targets for the replacement of kerosene with less polluting energy sources, but extended the definition of what a green fuel could be. The requirements, which if approved would be a world first, were originally proposed by the European Executive Commission last year to cut the climate impact of the aviation sector, which is deemed responsible for up to 3% of global emissions. Under the approved text, suppliers would be required to blend a minimum of 2% of sustainable aviation fuel, SAF, into their kerosene from 2025, rising to 85% in 2050, more ambitious than the target of 63% by 2050 originally proposed by the Commission.
Moving on to the top news in the energy sector.
The United States on Wednesday imposed sanctions on a network of Chinese, Emirati and other companies that it accused of helping to deliver and sell Iranian petroleum and petrochemical products to East Asia, pressuring Tehran as it seeks to revive the 2015 Iran nuclear deal. The U.S. Treasury Department said in a statement the network of people and entities used a web of Gulf-based front companies to facilitate the delivery and sale of hundreds of millions of dollars in products from Iranian firms to China and elsewhere in East Asia. Washington has increasingly targeted Chinese companies over the export of Iran's petrochemicals as the prospects of reviving the nuclear pact have dimmed.
Countries need to expand manufacturing of solar panels from their current concentrated base in China to ensure secure supply and meet targets for cutting planet-warming carbon emissions, the International Energy Agency said on Thursday. The world needs to double its current capacity to produce the key building blocks of solar panels, polysilicon, ingots, wafers, cells and modules, by 2030, the IEA said in a new report. Partly thanks to Chinese investment, solar photovoltaic technology, which converts sunlight into electricity, has become the cheapest way to generate power in many parts of the world. Next, we have the top news in metal markets. Gold rose on Thursday as the dollar pulled back slightly and some investors scooped up bargains after 2 sessions of heavy losses that plunged prices below the crucial $1,800 level. Spot gold rose 0.4% to $1,744.69 per ounce by 12:18 GMT. It has declined by more than $300 since the Federal Reserve began raising interest rates in March to tame unruly inflation, raising the opportunity cost of holding non-yielding bullion. U.S. gold futures were up 0.3% at $1,742.10.
News of possible stimulus in China pushed copper prices up sharply on Thursday from the previous day's 20-month low, but many analysts expect further declines as rising interest rates stifle global economic growth. Benchmark copper on the London Metal Exchange (LME) was up 4.6% at $7,865 a ton in official trading after Bloomberg News reported that China, the biggest metals consumer, was considering $220 billion of stimulus measures. Fueling gains were traders forced to buy back positions after they had ramped up bets on lower prices, analysts said.
We will now look at the top news in the agricultural sector.
India has tweaked export policy for wheat flour and asked traders to secure permission before exporting the commodity, the government said in a notification published on Thursday. New Delhi banned wheat exports in mid-May as a scorching heatwave curtailed output and domestic prices hit a record high. After the ban, demand for wheat flour jumped from neighboring countries struggling to secure wheat at lower prices from other suppliers. The restriction on wheat flour exports would be effective from July 12, the government said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.